Welcome to this video. In this video I'm going to be performing a stock analysis of Robotics. If you like this video, please don't forget to leave a like and subscribe. And of course, remember, this isn't financial advice. This is purely for entertainment and educational purposes. Now, I have to say I don't own any of this stock at all, but I do like it quite a lot. And one of the reasons I like them quite a lot is because of their partners. As you can see right here, we have Uber Eats, Nvidia, Delivery Hero, and 7-Eleven. So I do think those are quite nice partners to have. Now let's take a look at the graph. As you can see right here, it's a quite new graph. It was first published back in the 18th of April last year at around 3.19, and we're currently trading at 10.5, so it is up quite a bit, 300% over, which is quite nice. Now, as you can see right here as well, it is a very small company, only a market cap of $600 million, which means you should be a bit careful in a company like this, because this means, of course, you need a little less money to fluctuate the stock up or down. Now, as well as you can see here in the beta, it is a very volatile company. If you don't know what the beta means, that is how volatile a company is. And beta of 1 means it is as volatile as the index it lies in, that would be the Nasdaq, but 2.07 means it is 200% more volatile than that. So of course, be a bit careful in that regard. Now, as you can also see down here in the RSI, it fluctuates quite a bit, just like the stock itself. Now, currently we are up a bit in the RSI, trading a bit upwards, but I fear this is gonna disappoint, because as you can see here, we have earnings tomorrow, and the last 4 earnings have been quite poor. So it wouldn't surprise me if they fell. Now, as you can see right here as well, I have made some support lines. If it falls, the next support level we have is about $7, and the next breakthrough point is right here about $12. So we have to either rise about 20% or we have to fall quite a bit, about 30%. So let's see which way it goes tomorrow after the earnings comes out. Hopefully we're going to see a positive earnings for once, or at least one that is quite close. Because as you can see, they disappoint quite a lot every time. By 22%, 120%, 25%, and by 8%. So unless they disappoint, or at least they need to come up with some great guidance. Now, if they come up with poor guidance, I think chances are we're going to be down here in the RSI again, where we're going to be in the lower channel, which means the stock is going to fall. If you don't know, this is the RSI, and if something is between 50 and 30, this means the stock is trading downwards on the momentum, and if it's between 50 and 70, it's trading upwards in the momentum. So hopefully, if they perform greatly, we're going to see them lying up here, and chances are we're going to see them break through 12 here. Then the next proper level, support level, is right up here at about $24, which means, of course, then we need to see a 100% increase. So chances are we're not going to see that anytime soon. But overall, as you can see, it is quite a volatile company. Now, earnings, as I said, it is quite poor. Now, the dividends, they don't have any at all. Now, the revenue, as you can see down here, it's not that big. As you can see, they basically don't have any at all. And previously, the only income they had was the robots, and they haven't delivered any robots in 2024. But they have delivered quite a bit on their software. But we are going to see some more robot earnings, because they have promised to deliver 2,000 to Uber Eats in quite a large contract, which is going to be lovely to see, so we can see some more regular earnings. Now, performance of the stock last year was absolutely insane. As you can see right here, up by 334% by the end of the year, and at some point it was up by 523%, so quite an insane stock graph. Now, this year we're down by 28.6%, which of course is not that bad, given the fact that it is trading so much higher. Now, why don't I think this is bad? But that is because I think that chances are this is a bit overrated at the moment, and I do think we're going to see it trading downwards a bit, even though they might perform. I think chances are it's a bit overrated at the moment, because I think the stock market itself is a bit overhyped at the moment, but I do see Robotics winning in the future. Right now, I wouldn't buy personally, because I think they're overrated a bit too much. For me personally, the proper price level should be between $7 and $5. If they come down to that, I am definitely buying up, because of course we are going to see automation in the delivery service. That is just the most natural thing to happen. Now, if you're on here, the technical, as you can see, for the day it's a sell, and for the month, however, it is neutral. That is of course because even though they were trading downwards a bit, it has rebounded a bit, as you can see. So we are on this support level right here, and chances are that's because we have their earnings soon. Now, even though we have earnings that has been quite poor, sometimes they have been pressed on it, as well as right here. That's of course because the revenue was a bit more impressive than anticipated, but overall they're still disappointed in the EPS. So hopefully they can surprise tomorrow in a positive way as well. Now, the analyst rating on this, as you can see, are quite crazy. We have 6 strong buys. Now, we even have one that is below at $10, and the highest is $23. Now, I think this is a bit too crazy, and I don't like it when we only have so few analysts and everybody saying the same thing. I think there can often be a hype or a certain, just to of course say, well, if they think it's great, I'm also gonna think it's great. So I do think we are gonna have to wait and see a few years before it really takes off. Now, as you can see as well in the earnings, they don't estimate to make any earnings at all. I do think we're gonna need to wait quite a few years until we have 1,000 of these robots running around, because then they can take fees every single time, just like a subscription service. Of course, all the years Netflix didn't make any money, but they were estimated to make more and more money in the future. because of course they needed volume, and this is exactly what Serve Robotics needs. Now the annual earnings as well, as you can see here, they are estimated to grow more and more, but overall still it's just not quite enough. As you can see, still only earning less than $100 million all the way into 2027. The first year we're going to cross that $100 million is in 2028. So overall, a very volatile company. I do love the technology quite a lot, but I do think it's a bit overvalued at the moment. I would definitely hold this stock if you own it, but I would definitely wait a bit to see if you don't own it, to see them falling a bit, because it wouldn't surprise me if they fell a bit more. That was my analysis on Serve Robotics. If you like this video, please don't forget to leave a like and subscribe. And of course, remember, this isn't financial advice at all. If you want to see more videos like this, please leave the company to analyze in the comment section below.